It's been a rough one this week, given that we've had a 1% fall. That 1% fall may not look too much in terms of percentage numbers, but from that 15,400 top that we clocked in the post-budget rally, we actually succumbed to selling pressure. In fact, we've given up over 400 points, and we even reached the 15K mark in today's trading session. Today, of course, is when you saw a decisive trend getting breached in trade. So 15,008 is just about where we've managed to shut shop for the Nifty futures. Remember, next week is expiry, so things are only going to get more volatile from here. There was only one sector which was holding out today, and that was fertilizer, and that too thanks to the way UPL actually performed, because even the market breadth caved in. About 25 stocks only standing to the advances, with rest all standing to the declines within the F&O universe, about 170 names. For the week gone by as well, while you've seen PSU banks hold out, PSUs as a pack do very well, that wasn't quite the case when it came to the FMCG pack, or for that matter, even IT or pharmaceuticals. Nifty Pharma lost about almost 3% in the week gone by. But of course, today was the picture was a lot different. You had metals as a theme which caved in. Tata Steel was down about 4%. You also had the likes of a Hindalco, JSW Steel. They were all laggards in today's trading session. You also had banks which have really had a very steep run up in the post-budget rally. They also really were pressured. So at SBI lost about 3.6%. You had an Axis, ICICI Bank. These were all big laggards in today's trading session, as was the case with other names like an ONGC, like a Tata Motors. You had a Bajaj Auto, Eicher Motors. They were all laggards, as was the case with an M&M, Cipla, as well as Maruti too. For the week, of course, the big trend which most market men are focusing on, while they don't believe that this is a big trend or so in the making, they still believe that, the case for India equities is still very much intact. You've had time and again upgrades coming in for India equities. But yes, the post-budget rally was very steep, it was very swift, and it came in a very, very short period of time. So some amount of time-wise consolidation or correction is only par for the course. What's going to be extremely critical to map is going to be definitely the FII data. Is that a sell figure in today's fall? That is something that remains to be watched, because that's going to really give you a sense of whether this correction is any deeper than what it optically actually seems like. PSUs, like I said, in the week gone by were big movers, but that trade as well, while some of them like Concor still managed to hold out, or for that matter even a Petronet LNG, but some of the other names, buzzers like a BHEL, like ONGC I earlier mentioned, they were the ones which also saw some cuts actually coming in, as was the case with an REC, with an LIC Housing Finance, Apollo Hospitals, which again has been a one-way street up in the week gone by. That also caved in Friday's session, as was the case with Canara Bank as well. So let's see what sort of cues we actually pick up with trade on Monday morning. And yes, the FI data, that's going to be very critical.